Welcome back. You're watching The Market. Let's talk about the steel sector. We've got to the big interview with Tata Steel's top boss, TV Narendran. And now we're going to touch base with Jindal Stainless. If you look at the Jindal Stainless Limited stock price, it's, the last 6 months, it's higher by nearly 160% in trade. 5 days, about 14%. We wanted to touch base with the top management of Jindal Stainless for a whole host of reasons. A, what's happening in China. Metals are, of course, a hot story at the moment. Is a super cycle of commodities over, but also because stainless steel players in India are claiming that there is stainless steel being dumped by China as well as Indonesia in the Indian market. Joining us now is Tarun Khulbe, director at Jindal Stainless. Thank you so much for joining us here live on ET Now. So I've got data till about July, so I'm going to use that to talk to you to understand what's going on. On one side, we've seen stainless steel prices in India year on year go up by what, 50–60%. On the other hand, you've seen countervailing duties being removed. You've seen relaxation on imports for stainless steel. And players like yourselves are saying that China and Indonesia are dumping stainless steel. Then how are you hiking prices and at the same time complaining about dumping?
Okay, Aisha, thanks for inviting me. Let me cover both these aspects separately. So, so far as the dumping part is concerned, as you said, that the government of India in this budget removed the countervailing duty (CVD) on China and also on Indonesia. At that moment itself, the domestic industry was apprehending that this will result into a flood of imports. And now when we look at the data of the last 5 months, our apprehensions or domestic industry's apprehensions are coming true. The 5 months average imports is around 178% more than the average of the previous year. And if you look at the share of China and Indonesia, it is for the July and August average, it is around 78%. So this is quite clear that whatever whatever the apprehensions were, they are coming true, and all this hurts a lot to the small players, small MSME players. In India, around 1/3 of the capacity of stainless steel is catered by the MSME players who do melting. Some of them do hot rolling, cold rolling, and serve the utensils and these markets. So with these kind of dumping, many of them are already facing heat, closing their shops and becoming traders. Now, your other question was on the pricing. So let us understand the pricing is a different thing in stainless steel kind of a product. So for making of stainless steel, we need carbon steel scrap, we need SS scrap, nickel, copper, chrome. And now all these raw materials are essentially imported in India because domestic availability is limited. And in an open market economy, the finished goods prices normally are in consonance with the raw material prices, and so is the case with the stainless steel. If I give you some data from July 2020 till August 21, if you look at the prices of carbon steel scrap, there is an increase of around 88%. In stainless steel 304 scrap, there is an increase of around 68%. In nickel, around 58%. Copper, 52%. And chrome, ferro-chrome has increased around 92%. And when we look at the finished prices in comparison to this, so carbon steel cold roll finished prices increased by 90%. In the stainless steel,
right.
30, and let me complete.
Okay, I take that point, Mr. Khulbe. I take your point. The price. So I take your point and how the pricing is moving. But, the higher imports that you're talking about, making a case for dumping in India, is that going to now stop simply because of what's happening in China? You have power supply outages. You had, because of ESG concerns, the Chinese government stopping electricity as far as industry goes. Coal prices have shot up. They've been looking for alternative sources for electricity too. So just because of that and the disruption which is taking place, what is it going to mean for Jindal Stainless and other stainless steel players?
to China, Aisha, I'm sure you will agree that the world has always, struggled to understand China, and most of the time they have surprised by their results or by their moves, and most of the time they provide unexpected on either side. So even in the past, almost few months before, there was a news that the Chinese government has taken away around 13% of export incentive. That time also it was expected that now the Chinese imports coming to the country will reduce. But as I said, that if you look at the 5 months data, there's an increase of 177% in imports. And from the China, if I compare, then the increase has been around 400%. So now this power outage and all this phenomena, which is recent one, and I think it still needs to be understood, because there are so many stories which are going around that there is a coal crisis. Another one is that they are trying to control the carbon emission. But how long will it go, and what exactly will it mean so far as exports? I think we are watching, and we would like to watch it for some time before we make any comments on it.
Khulbe, coming in on your plans to expand capacity, you're talking about doubling the melting capacity at Jajpur and Odisha, and you're also talking about increasing downstream capacity by increasing the capacity of hot rolled, annulate, pickled and cold rolled, annulate, pickled products. So talk to us about over what time frame this is getting done. Talk to us about the amount that you're spending. What is the cost in this financial year?
Okay, so as we have already announced that we are going for an expansion in our Jajpur plant, and we have already planned to increase our melting capacity by 1 million tons. This capacity is likely to come into production by the end of the next year. And simultaneously, yes, we are also investing into the downstream, on one hand, that in the cold roll capacities, and also upstream in the ferro-chrome facilities. There also we are increasing the capacity. So looking at the growth of the stainless steel market, like this financial year also we are expecting a growth of 8 to 10%, and the continuous strong demand of the stainless steel. We believe that all these expansions and capacity expansions are going to be beneficial for us and also for the country.
Understood. Mr. Khulbe, also, could you take us through the trends that you're seeing in the ferrochrome and nickel pricing? Could you give us a sense of what the EBITDA per ton could look at going forward in the rest of this financial year?
So nickel is always volatile, and as I said, that if we look at the data from the July 2020 till August 2021, the nickel on LME has increased by 57%. But this is quite volatile. We all know anytime it goes up and down. So far as ferrochrome is concerned, in the same period, it has gone up by 92%, but again, it is increasing. There is a volatility in the ferrochrome as well. And now the increase is roughly to the tune of 98% from July 2020 till September 2021. So far as our performance is concerned and EBITDA per ton guidelines are concerned, I think we had issued EBITDA per ton guidelines of 18 to 20,000 rupees per metric ton. And looking at the strong market demand, looking at the strong consumption of the stainless steel, we believe that our performance will be in line with our performance of the quarter one, and we are more than confident of meeting and exceeding these EBITDA guidelines what we have provided.
Okay. Mr. Khulbe, thank you so much for taking the time, and we will touch base with you, I'm sure, in the very short term. Wish you all the best. On that note, we're completely out of time on this edition of The Market.